George Dowd from Newedge, USA, from the floor of the CME Group for MrTopStep.com. Today we have Chairman Bernanke's comments at the previously called Humphrey Hawkins testimony. We're looking for the comments to be slightly more dovish on today's commentary. The last FOMC minutes were cautious towards further easing. We're really looking for any signals that there's going to be increased asset purchases going forward. In our opinion, additional QEs likely pre-elections, with August 1st being a possibility, but September 13th being more likely. I think the most important part of the comments today is going to come during the Q&A session. We had some commentary out overnight that an aide to Schumer had said that Senator Schumer would be asking questions about the potential for more easing in light of the fact that there's no inflation and that the unemployment situation's been deteriorating a little bit, or at least failed to resolve itself. So these comments will be interesting in that they come after the employment numbers for July and also after the retail sales numbers we had earlier the week. And then the inflation numbers confirmed this morning with CPI seeming very tame. As far as technicals go in the currencies, the euro is still in an overall downtrend. As I said last week, we're looking for signs in that market that we're getting to points of exhaustion. And so we've had a little bit of a rally in the euro today, part of a general dollar sell-off that I think makes sense ahead of the Humphrey Hawkins testimony today. And really, it hasn't rallied enough that we're at levels that we want to sell. So I would say cautiously short here if you're short already, but keep looking for signs of exhaustion. The market's pretty oversold down here, and there's definitely a concern that we could get a rally on short covering. As far as the yen goes, same thing. We've traded a little bit lower, mostly on the back of weak dollar coming into Humphrey Hawkins. And in that market, we had some comments overnight from Azumi from the Ministry of Finance, basically saying that they don't really like it down around the 79 level. So over the last few weeks, it's been pretty boring trade between 79 and 80. And as we get towards the lower end of the range where we are now, I think you're going to see an increase in rhetoric that, speculators probably don't want to be getting too short down here, that Japan doesn't like the yen to be so strong. And again, that's going to increase the chances of any comment-induced rally, more so than a positioning stop-loss driven rally. So another thing to keep an eye on there. The last thing I'll mention is the RBA. We had their minutes out last night. It just seems like they're not really inclined to ease anymore. We've seen the Aussie dollar strengthen on that over the last couple of days. We're still looking at this 103.30 level on top for signs of another leg up in the Australian dollar. Generally, we're constructive on that market. From the floor of the CME Group, I'm George Dowd from Newedge for MrTopStep.com.